everyone, welcome back. I'm glad you're here. If you missed last week live about the travel central, definitely go check it out later. We talked about how to build your business travel around your personal vacations to make it fully deductible. That one was a game changer for a lot of people who love to mix business with fun. And today's topic connects perfectly to that. Because once you start claiming smart deductions like that, the next thought that pops up is, wait, is this safe? What if the IRS asks questions? And that's exactly what we are diving into today. How to audit-proof your deductions and understand the real IRS red flags so you can take advantage of every legal tax break without the stress or fear of being audited. Here is something most people don't realize. Audit rates are at historical low, but the IRS still targets certain type of businesses, mostly sole proprietors who file on Schedule C, especially with gross sales of about $100,000 and cash-heavy businesses like restaurants, salons, and laundromats. Why? Because those are easiest places to find mistakes. Meanwhile, if you're an S corporation or partnership, your audit risk drops dramatically to about 0.2%. That's less than 1 in 500 businesses. So the audit risk for those proprietors is several times higher than for S Corp owners. So yes, structure matters, but what really keeps you safe is how you handle your deductions and documentation day by day. Let's talk about what actually protects you. Here is 5 simple ways to make your deductions bulletproof and keep you off the IRS radar. Every expense must have a business reason. If the IRS ever asks, you should be able to say in one clear sentence what the purpose was. Example, lunch meeting with a client to discuss new project ideas. That's it. Simple and defendable. You don't need to be an accountant, just be consistent. Snap a photo of each receipt, save it in a folder called, let's say, 2025 receipts, and make sure it connects to your bank or credit card statements. Now, the big question I get all the time, how long do you keep those records for? And here is a quick rule of thumb. Receipts and expense records keep for 3 years after you file your return. Or, to be on the safe side, 6 years, if you suspect the IRS might question your income. Tax returns themselves keep forever. They are your proof of what you filed. Payroll records keep for at least 4 years after the tax was due or paid, whichever is later. Property or asset records like equipment or real estate keep until the asset is sold, plus 3 years after that. So not forever, but long enough to protect yourself if anything comes up later. This one is not negotiable. If you mix business and personal, the IRS will assume your books are sloppy. So one business bank account, one business credit card, and run everything through that. It instantly makes you look clean and credible. The IRS looks for inconsistencies, not perfection. For example, if you are a home-based consultant but deduct 5 business retreats a year or claim 90% business use on your car, that's suspicious. Or if you're deducting massive marketing expenses but have no income growth, that's a red flag. So think like an auditor. Would this make sense if someone outside of my business looked at it? If yes, you are good. Most people only talk to the accountant once a year, when it's already too late to fix anything. Audit proofing happens before tax season, when you plan your deductions and document them properly. That's how you keep more money and stay fully protected. Let's talk about the red flags that actually trigger the IRS attention. The ones you may not even realize that are dangerous. Claiming losses year after year. The IRS starts thinking it's a hobby, not a business. Usually, if they see losses for 3 out of 5 years, you might receive a letter from IRS. Second one, big deductions that don't fit your size or industry. For example, $20,000 in travel for a tiny local service business. That's a red flag. Perfect round numbers on your tax return. Let's say $5,000 exactly for supplies, $3,000 exactly for using subscriptions. Real numbers have sense and variety, so that would be a red flag. And I see it very often that people do on their taxes if they prepare it themselves. Cash-heavy operations with mismatched deposits. If what you reported doesn't match your bank activity, that's a problem. Missing documentations, no receipt, no deduction, period. Next one, S corporation with zero owner compensation. This is a huge red flag. The IRS expects you to pay yourself a reasonable salary before taking distribution. Total 1099 income doesn't match your reported income. If the IRS has 100,000 in 1099s per day records, but your return shows $90,000 in sales, they will send you a notice. And last one, personal lifestyle not matching reported income. Taking major deductions while showing tiny income looks suspicious. Knowing this gives you a power, because once you know what they look for, you can fix or prevent them before they become a problem. And to make it super easy for you, I put together a simple audit-proof business checklist. It covers all the basics, what to track, what to keep, and how often to review things, so you can run your business with total confidence. If you're watching this live or even on the replay, comment or DM us the word audit, and we will send it right to you. That way, you will have a step-by-step cheat sheet to stay organized, protected, and audit-proof year long. Here is the truth. You didn't start your business to live in fear of the IRS. You started for freedom, for your family, for independence. And when you understand how to document and plan, that fear disappears. You get to take full advantage of the tax laws legally and confidently. Because the IRS doesn't reward the scared, it rewards the prepared. If this live hit home, do 3 quick things. Like and share this with another business owner who is tired of worrying about audits. Follow us for next week's 15 minutes Tax Savvy Small Business Live, where we will dive into another powerful tax saving strategy. And don't forget, even if you are watching the replay, send us the word audit, and we will send you audit-proof business checklist. Because you have worked too hard to give away money out of fear. Let's make sure every deduction you take is safe, legal, and fully defendable. That's it for today. Thank you so much for joining me, whether live or on replay. I truly appreciate you being here. Go run your business boldly, take every deduction you have earned, and I will see you next week for another 15 minutes Tax Savvy Small Business Live. Until then, stay smart, stay profitable, and stay tax savvy.